All right. Guess we're live.
Hey, Dino, do you have that link? Yeah.
Amen. Okay, we're live. So here's a link.
All right.
Sure. One sec, I'm gonna get my sweater.
All right, boom. The link is all shared on Discord,
Uh-huh.
Twitter, and I am ready when you guys are.
Okay, I'm back. Let me start sharing my screen as well. Um, One sec, just to make sure that everything's working on the side of OBS. Okay, I think we should be good to go. OBS says yes. Oh, we don't have anyone monitoring the stream, so I'll be monitoring it in the every now and again. Basically, just be um, switching through to the stream to see if there's
Yeah, I'll do
any.
that with you, just so while you're talking, I can keep track of anything I see.
Okay, cool. And start recording. All right, we're live. Hello, everyone. Welcome to another edition of This Week in Crypto, and what a week it's been. So, if this is your first time here, this is a weekly panel where Santiment team and community members we kind of gather around and we talk about the recent crypto market events. We look at the on-chain social media and development activity information on a bunch of different coins, and we try to figure out what the heck happened over the last week. So, if you've never used Sentiment before, I suggest starting at sentiment.net. What we do is we develop custom tools, metrics, and indicators using on-chain data, social media data, and development data to help you better understand what is happening in the crypto market and what is behind the behavior of its major participants, whether that's whales, miners, speculators, the crowd, network participants. We have metrics on all of those and more. Many of them we have built in-house, so they're not really available anywhere else. And we're going to talk about a lot of them today. I think there's quite a bit of stuff that we want to go over. So anyway, I suggest checking out santiment.net after or during the call if you like what you hear. And also join our Discord because we talk about this stuff pretty much every day in our trading channels anyway. So if you don't want to wait until next Friday to hear what we have to say, or you want to kind of pick our brains about any specific topic, any specific coin, just go to our Discord. The link is going to be in the description of this video. And yeah, join us there. So anyway, back to the market. I'm joined today, by the way, by Brian and Max from Santiment. Hey guys, we're kind of at a shorter roster today, just because there's, I think, like a national or international holiday for a lot of our employees. But there's definitely not a holiday for cryptocurrency prices, and especially Bitcoin, which is over the last, I think, week or so, it's pumped around. The last time I checked, I think it was about 12% for the week. So pretty massive spike. We reported on the fact that we've seen some changes in the mentality of stablecoin holders here around April 21st. So basically around Bitcoin's latest bottom, we have seen some early indicators that things might be changing for a lot of people that have kind of been out of the market for the last 40 days or so. So I'll just, for example, show you a few metrics that I mentioned in an article that I wrote. You can find it on insights.santiment.net. It's called, I think I called it What's Behind Bitcoin's 10% Pump? And the answer is stablecoins. You can find it, I'll link to it in the description of this video as well. So this is the article, and I talk about the differences or the changes in the behavior of pretty much all of the major stablecoin holders. So, for example, USDC had this major spike in the exchange inflow, basically the amount of USDC coins that were moved to exchanges right as Bitcoin started bottoming out. There was a correlating spike in the token age consumed for USDC as well, basically indicating that some, all-time holders of the USDC, basically people that have not really been active on the market for a fair amount of time, have started moving their coins once again. These usually indicate significant behavioral shifts among long-time market participants, and they're always an interesting event to keep an eye on. So this is what happened, not just with USDC. Let's briefly go over a few different coins that we saw this type of behavior with. True USD, one of them, same thing. You saw a spike in exchange inflow and a similar spike in token age consumed. With BUSD or Binance Coin, we have seen a fairly similar behavior as well. There was a spike in exchange inflow and a spike in token age consumed as well. We also saw an even larger spike here, which should actually bode pretty well for the long-term outlook of the market, or like mid-term outlook of the market, because it seems like more stable coins are actually, as far as BUSD is concerned, more BUSD is now entering exchanges. I would probably assume Binance over the last 2 days or so. So the reason why they would be moving to exchanges, presumably, is to convert them for more volatile assets like Bitcoin and altcoins. So anyway, this is just to show that there were some indicators that we're seeing sort of a paradigm shift in the market. We're seeing a lot of stablecoin holders, a lot of people that have not been active since the Black Thursday event. Pretty much, we're sitting on the sidelines waiting for a good opportunity to go back into the market. We saw a lot of them going back into the market right around here. So as Bitcoin started kind of on its way upwards, that it's been over the last 7 days or so. Now, over the last 2 days, it's kind of a different story. So Bitcoin has already corrected a little bit. We see it here, and it's now still kind of trying to push above this 9K psychological limit or psychological resistance level. So I wanted to kind of go over a few metrics for Bitcoin that I talked about yesterday on another stream, saying that I think as Bitcoin was kind of starting just to correct, I thought that there was a correction imminent for a few fairly simple reasons. So here we're looking at the price of Bitcoin, and first of all, let's look at the exchange inflow for Bitcoin specifically versus its price. Maybe I should go to a bright mode so you guys can see it better, and maybe I should zoom out a bit so you can see the sort of impact of this or the size of this event. So yesterday, as Bitcoin started kind of trying to push above the 9K mark, or trying to reach the 9K mark to begin with. I saw the biggest amount, or the biggest spike in the amount of Bitcoin moving to centralized exchange wallets in the last 2 weeks. And it's one of the biggest spikes since the Black Thursday event, if you can notice it. So when you look at it even closer over the last month, you see the magnitude of this particular spike. And especially if you take into account the general price action of the market, this was a relatively worrying sign for me. This amount of coins, so this is what, 8.3K, so 8,300 Bitcoin being moved to centralized exchanges just yesterday. Um, the reason why so many coins would be moved right as Bitcoin was peaking is, I think, fairly obvious. I think some people were kind of looking to exit the market. Some weekends weren't really feeling confident about Bitcoin's move above 9 and imminently 10K as well. So this was the first sort of worrying sign for me, that I thought, okay, we might see a short-term correction at the very least. There have been several other signs that were kind of confirming this same hypothesis for me. Another one was Bitcoin's token age consumed, which also saw a massive spike, actually slightly earlier than the actual top. So for those unaware of how this metric works or what it measures, token age consumes tries to measure the activity of coins that have not moved in a very long time. So when you see a spike in token age consumed, that means that usually a significant amount of previously dormant coins that have not moved from their current address in a very long time, are now starting to be active again and move between addresses. So these types of movements are usually not without reason. When people that have been patient for a very long time start moving their coins, they usually don't do it without analyzing the market at great length and depth, and b, sometimes by just the virtue of being in the know and knowing that some move is about to happen. So when you saw these spikes in token age consumed, it's usually a very good sign that you know that coin is ripe for some volatility in the very near future. So this is exactly what happened. If we take out exchange inflow for Bitcoin and we only look at token age consumed, it started spiking right before this stop, and since then we saw a smaller correction. So this was, concerning signal number two, that something was going to happen with Bitcoin yesterday. Concerning signal number three was not actually an on-chain signal, it was a social signal. So for those of you that know Santiment, you know that we track over 1,000 different crypto social media channels. So we track, Telegram groups, crypto subreddits, Discord channels, professional trader chats, basically anywhere that we know that conversations are going around specifically about Bitcoin and cryptocurrencies. We try to track and collect data from those channels, and then we collect those messages and we plot them against the price of specific coins. So basically here what you're looking at the amount of mentions of Bitcoin on crypto social media over the last month, plotted against the price of Bitcoin over that same time frame. And you saw this major spike in Bitcoin related chatter yesterday as the move above 9K started happening. We have a tool called Emerging Trends, which also captures the top 10 biggest sort of words that are gaining the most social volume on crypto social media. Yesterday, this list was full of BTC related chatter. There was like Vegeta was one of the biggest words, obviously because the crypto community was memeing about Bitcoin going above 9K, the famous Vegeta meme. So there was a lot of sort of excitement in the market. Memers came out, Moon Boys came out. I think in general there was quite a lot of FOMO, happening as Bitcoin was kind of breaking the 9K barrier. So why is this a concerning signal? Well, if you look at Bitcoin social volume trends over the last year, you will notice something very interesting. So this is Bitcoin social volume over the last 365 days. And if you take a look at each of these spikes, you'll notice that almost every one of them correlates to a significant change in Bitcoin's short-term price action. So first of all, we saw a spike in Bitcoin social volume here right before this first correction. So this might be where we are at the moment, and I would not be surprised if this is the case. We saw a major spike in Bitcoin social volume right around the actual very top of 2019. and then another one during the second smaller top. There was a correlating spike in Bitcoin social chatter. The same thing happened here in August of 2019. And there were several spikes during Bitcoin's bottoms as well, because for Bitcoin, for these larger coins, the crowd doesn't only talk about it more than usual when it's pumping. They're also more talking about it more when it's generally, at a very sort of negative, during its negative trends. So we also saw Bitcoin spikes in Bitcoin related chatter at this bottom, this bottom, this bottom, and obviously during the Black Thursday event. So the fact that we have also seen this major spike in Bitcoin social volume yesterday, and the fact that our list of trending words was filled with these positive mentions of Bitcoin, memes, overall bullish sentiment was another sort of signal that we might be prone for at least a short term correction before a possible bounce back. So these are some of the things that I wanted to show you as sort of a precursor, or things that I think were generally a fairly strong indicators that we might be poised for this small correction that happened yesterday. Um, Now, as far as where we think Bitcoin might be going next, maybe I should, take it and ask my other so-called panelists here what they think. I think, guys, we talked about Bitcoin today already in our chats, and in general, it seems to me like a lot of people in the team, in the sentiment team as well, think that the short-term action of the coin might not be as bad as some people are now making it out to be. Max, Brian, what are you guys thinking about how do you feel about the general market vibe at the moment?
Yeah, I think the overall crowd right now is starting to become rational, as we like to put it, which means that they feel at this point like the price has surged up enough since Black Thursday, the past 45 days or so, um, to the point where they feel that a correction is imminent. Anytime we've seen this basically over the past 2.5 years, this kind of run up, it generally comes with a pullback that stops a lot of people out and scares a lot of people out of the market. So people are almost um, making that a self-fulfilling prophecy right now, and from what I'm seeing, it's full of social media is full of a lot of people talking about taking profit here, and they'll buy back in when Bitcoin's in the low 8,000s or high 7,000, stuff like that. And it's a with the event coming up, with the halving in about 11 days from now, we're seeing a little bit of polarization happening. A lot of people think the price is going to spike. Others are saying, well, based on history, the price tends to actually drop and fake a lot of people out before rising higher. And the reality is no one really knows. And that's why we have these metrics here. We're looking at social volume and how it really, peaks with these price direction movements. And, over Black Thursday, we obviously saw the biggest spike. Over the past few days, we saw the second biggest spike over the past 6 months. Go by this, it means that some correction is underway now or about to happen. However, it could be very temporary, and I think we could see the crowd getting very faked out right now and selling off, expecting the price to easily go down to their targets of 10 or even 20% below where we are now, and have it never make it that far down before surging higher. So timing the market right now with the halving coming up can be a very tricky thing to do. And personally, I think the people who are going to do the best are the ones who simply hold and not try to be too precise with this type of thing over the next couple weeks.
Hmm. So on that point, I actually also wanted to talk about. So this is what happened over the last few days, right? But I also wanted to look at some overarching trends for Bitcoin, and why I think both Brian and I, obviously, these are very tumultuous times. It really could go either way, but I think there are some hopeful signs, at least for now, still that this might just be a small correction before a higher move. So one of the things that I was paying attention to for Bitcoin over the last couple of days very attentively was its daily active addresses. So essentially here you're looking at the amount of addresses that are interacting with Bitcoin on a daily basis. By interacting, I simply mean amount of addresses that are either sending or receiving, buying or selling Bitcoin, right? So if we look at Bitcoin's daily active addresses over the last year, this is actually the highest amount of its on-chain activity if we measure it by daily active addresses since the 2019 top. Now that's a good sign and a bad sign at the same time. So the good sign is that we're still not seeing a drop in its network activity. This drop here is not. This is just the amount of daily active addresses has not been calculated for today yet. So don't take this with a grain of salt. It could actually go up even higher. We just don't know. But the fact that for now at least we are seeing the on-chain activity of Bitcoin being able to support these high price levels. One of the things that we very often see when it comes to corrections, price corrections based on its correlation or relationship with on-chain activity is that you will often see price starting to go up but the amount of on-chain activity declining. And this is exactly what we saw during Bitcoin's 2019 top. So we saw right here the amount of the daily active addresses started to decline as Bitcoin was trying to push another high. But given that there was no fundamental or network support for its push upwards, the correction was basically became a self-fulfilling prophecy. So this is, for example, why we're currently not seeing a sell signal in our DAA divergence template. So for those unfamiliar with this template, basically what we try to do is we try to measure the differences in the trends between the price of Bitcoin and its daily active addresses. So when there's a huge drop in the price of like a coin, but there's a huge spike or generally relatively big spike in its network activity, this template will fire off a buy signal. And you saw that there were several buy signals for Bitcoin here right at the Black Thursday event as the price was tanking, but the amount of on-chain activity was not. It was in fact booming. So there were several in a row signals that based on the relationship between the Bitcoin's price and its network activity, this was an opportune time to buy. And in fact, this is what happened. And then next, what we saw was around this very interim top, there were several sell signals that also came true as well. So what this meant was that price was now rising, but the amount of on-chain activity in terms of daily active addresses was either slowing down or actually started to decline. So these were the first warning signs of a short-term correction, which indeed ended up happening. So currently, we're not seeing any new signals being triggered. And for me, this is for now at least a pretty good sign. Why is this a good sign? Because we saw this massive spike in the price action of Bitcoin over the last couple of days, and yet we have not seen a red line here, meaning that at least for today, the amount of network activity is still following the rise in price. So the activity on the network is rising along with the price action. As long as this keeps happening, I think we are fine with saying Bitcoin can chart new highs. Obviously the concern is that the point or the moment when this amount of network activity starts declining. So let's see what happened historically so that we might see or we might guess what could happen next. So last time the DAA levels were this high, there was, it basically peaked right here before the first correction. So what happened next for daily active addresses is that they started declining and never really recovered. And I actually believe this is where we are at this very moment. So I think at this moment we are somewhere around here. So somewhere in the middle of this first correction before the second sort of pronged pump. Now, the biggest question for me is going to be whether during this second attempt at a higher high, we are going to see the amount of on-chain activity in terms of daily active addresses start rising again or declining like the last time. So if we see this sort of movement or this sort of price pattern appear again, which I wouldn't be surprised, what I would hope to see if I'm looking for Bitcoin to go above 9 and then eventually 10K, I would hope to see a correlating spike or rise in its network activity as well. So over the next couple of days, guys, keep an eye on daily active addresses for Bitcoin. If you see these major declines in its network activity, these could be the first warning signs that the crowd is actually kind of cooling off. And for now, the price action is probably not going to be able to support another push up. for now, as I mentioned, daily active addresses are still very high. I would not necessarily hold it against Bitcoin at the moment. Obviously, this is at least in part because there's a lot of people or some people selling off their bags, which is to be expected. But in general, the amount of value being transacted on the network currently is fairly high. So I would wait until it starts dropping before pronouncing it dead, for now at least. Um, what do you think, guys? Do you think that kind of makes sense for Bitcoin's maybe 2 week outlook? Look at its daily active addresses and figure out what's going to happen.
Yeah,
Yeah.
definitely. Yeah, it worked in the past, and it's still, it's not used by market makers, big players. They don't use this metrics, so they're reliable.
Yeah. So that's kind of where we are at the moment, guys. I think my guess would be that we are currently somewhere around here. Like if we zoom in on the last month, yeah, you can see that this is basically already what's happening. So we're already seeing this second sort of attempt at a push upwards. So this is where, let's see what happens today with daily active addresses, tomorrow and the day after. If we see the decline in on-chain activity for Bitcoin, and a sharp one at that, we might just be kind of hanging on around these levels or below for the time being. If not, we might be poised for another push upward. So that's it. Gonna be it for me, Brian. I'm gonna hand it off to you. I know you have a few templates and data points that you wanna go over as well. So if you wanna share your screen, and I'll stop sharing mine, you can go ahead and take over.
You bet. Thanks, Dino. All right. So as Dino said, we did see our spike here just a couple days ago on the 29th. Basically what was it? What was this? I'm sorry, Dino. What was the actual spike here that we saw right before the top that you showed
It
right
was in token age consumed. Basically, old coins started moving quite actively all of a sudden.
So the reason I bring that up is because right now what we're looking at is the halving or halvening chart and the amount of social mentions related to them. And you'll notice that that token age consumed that happened on the 29th was pretty much right correlated with the halving discussion as well. And if I'm willing to bet, I would say that the people who are consuming those tokens at high rates right around this time are doing it due to some concerns about the halving. And if we look at the top 3 spikes that have happened over the past month, we'll see that they all correlated with price flattening and dropping. So this first big one that happened on April 8th here, we had a social dominance over 1% at almost 1.5%, which is massive for a subject like the halvening. And then the price kind of flattened and dropped. Then we saw this one here, which actually sort of instigated the initial rise. So we had one big spike here, and then a big talk about it, and then sort of a mild rise that happened for about a week afterwards. And then it rose all the way up here until we had our one major spike, and then about probably 12 hours later, we hit our top. So the halvening one is going to continue picking up steam over the next 10 days. I guarantee you that. And what we'll really want to look for are these isolated spikes related to it, because I think that's going to be the biggest subject that's going to dictate these markets as we hit the big day on May 12th. So that's something to keep an eye on. I'll actually leave a link for it on Twitter later on, so you guys can actually track it yourselves over the next 10 days. And if you're a Sandbase Pro member, you'll be able to get live real-time updates as far as any spikes you see.
Maybe, Brian, we can leave a link also in description to a video when we publish it.
Yeah, absolutely. I'll do that. I'll do that toward the end of the call. So moving on here, for those of you who follow us on Twitter, you may have noticed we made a post about the new compare feature that we have on Sandbase. And what this does is it allow you to actually directly compare one trend or metric or keyword directly to another that may be something that's a counterpart to it or an inverse correlation to it. And right now, what we're looking at are the mentions of buy or bought or buying compared to sell or sold or selling, and seeing how they correlate over time. Now, a misconception is that these are actual true values, and I want to iterate to everyone that this is actually the relevant the relevant lows to the relevant highs over the period of time that we're looking at. So we're looking at a month right now, and all of the blues are basically measuring the low point versus the high point of that respective metric, which would be buy, bought, or buying, compared to the respective sell, sold, or selling, lows versus highs, independently of each other. So, for example, what we're looking at here was a huge spike in mentions of buys, which coincidentally correlated with the halvening spike, literally the exact same bar. And they keep graying out on me. Anyways, so what we're seeing here is a huge dominant swing in only mentions of buys and very few mentions of sells, just for this particular bar. But as we hit the top, we actually started seeing a huge mention of sells right after the top hit, and it became a self-fulfilling prophecy, and the price started to drop off. Now, if you actually look at the specific bar, it was about close to even, a little bit under. So selling was at about 1,120 mentions, while buying was just at about 9,000. So selling did overtake it, but not quite as much as this bar would indicate, because overall, we can see that over this month time frame, bought was brought up 3,600 times versus selling 2,700 times. So each spike in red is going to be a little bit bigger proportionally relative to the buying. So that's something you got to keep an eye on when you look at these kind of comparisons. Overall, though, basically what we see is a trend of mentions of sells now that has been dominating since the spike happened, until over the last couple hours, basically people are starting to figure out which direction things are going to go next. And we have a very small, sort of cautious sample right now of buys and sells, because people aren't sure which way it's going to go. But right now, we're seeing a little more dominance on the sell side. Let me see if I can zoom in just to show that bar a little better. Yeah, so right now we're basically just seeing a lot of sells without many buys at all. But we want to wait for this latest candlestick to complete. And if we go to the one beforehand, it's a little more on the buy side. So basically what we're seeing here is sort of a trade-off between a little bit of sell dominance and a little bit of buy dominance. But when the bars go this low, it basically means that we're not getting any dominance either way. So we're going to wait for the mentions to start to pick up again, and we see buys and sells mentioned at this kind of rate that we saw on this run up, and then we'll have a pretty clear indication of which way the crowd is leaning toward. So really cool thing here to look at.
So, Brian, while we're on the subject of social volume, could you go to our sentiment graphs just so we can kind of gauge what the general crowd sentiment is about Bitcoin and Ethereum in particular? So, for those that don't know, we've, other than just the total amount of mentions on crypto-specific social media channels, we have also developed our own in-house sentiment algorithm, which essentially tries to figure out whether these mentions that we track are positive or negative. And we have developed a bunch of charts. The last one here on these dashboards is the one that we are going to be looking at, because it shows the difference between positive and negative mentions. So there we go. So currently we're looking at the sentiment for Bitcoin on Twitter specifically. And this is what we're seeing. We're seeing a 1 year high. Actually, we saw a 1 year high in the Bitcoin related sentiment yesterday, right, or the day before, basically right around the time that Bitcoin started pumping. So the last time that happened, we saw a short-term correction. That wasn't the ultimate top. It was just the first leg of the rally. If you look at, like, what is that, March 2019. But this is there was a need for a correction just based on it was not March, it was May 2019. Yeah, that
Yeah.
sort of massive spike. So there was a need for at least a short-term correction, just based on the amount of bullish overall sort of tonalities that we saw in crypto social media. There was a lot of talk about FOMO, Vegeta, memes, 10K, 12, 20K. People were in general sort of in Lambo mindset. And now we're already seeing this sort of spike in sentiment start to go down. So it's going to be very interesting to see what happens next. So what about Ethereum, Brian? As far as its Twitter sentiment is concerned, I saw yesterday that Ethereum was actually quite different from a Twitter perspective. I saw that it was actually for the first time in about a month going in a negative sentiment territory. I'm wondering if
We're
that's
just about even.
okay. Yeah, so now I think it actually went a bit up. So yesterday, at least while as I was seeing it, it just passed that sort of neutral territory and went into bear sentiment. So this is something to also keep in mind. So it's not really the same thing that we're seeing on these charts for Ethereum and Bitcoin. So Ethereum seems to have currently been very much, sort of in neutral territory. People are relatively rational as far as they're concerned. But for Bitcoin, the image looks quite different. Actually, Brian, if you can kind of zoom in to the last 1 year, so let's say from April 2019 onward, I think there's a clearer picture that we can show. I was looking at it yesterday, and it shows quite interesting correlations between Twitter sentiment for Ethereum and its price action. So, guys, look at the previous spikes in Ethereum positive sentiment. So let's start with the May one. So we have the big spike in May of 2019, right before the correction or consolidation. We have another spike or two spikes in July of 2019, essentially perfectly correlating with the two tops. Then we have another spike right before the correction in sometimes mid-August 2019. And then finally, we have a big spike in February of 2020 in Ethereum's positive sentiment right as Ethereum started to correct, or as it was reaching its peak. So we can see that these massively positive events in a certain coin's life cycle usually have an adverse impact on its price. At least short term, these moon talks, overwhelmingly bullish sentiment is usually a pretty concerning signal for its price action. However, recently, we're seeing quite the opposite happen for Ethereum, and this is one of the reasons why I think Ethereum might actually be poised for a larger leg up than Bitcoin, at least in short-term prospects, because its crowd seems to be, or relatively Ethereum-related sentiment seems to be relatively normal, neutral, almost ambivalent. Not to say different, but definitely ambivalent relative to at least Bitcoin in particular. So the fact that we're seeing some sort of a neutral territory as far as Ethereum-based emotions are concerned might actually be a good sign for its short-term price action as well.
Yeah, agreed. I think the big extreme in the waves are the one you really want to look at. So obviously, when it goes up to close to 2 here, that's when you see these tops. When you see it go as low as almost -1, you see a lot of bottoms. The same here. A lot of people around Black Friday, or Black Thursday, that was, tended to get uh, very screwed over. A lot of people went negative early on, and they actually, kind of sold off as the price was going down. And then as it really dipped down to close to -1, about -8 or so is where it got down to. That's when prices basically bottomed and began to rise up. And then people, of course, became positive once we got to about 150, between 150 and 165-ish. That's when things started to turn positive again, and people FOMO'd back in. But this is pretty much the nature of the cycles in crypto is people tend to turn negative as the price is already moving down. And then once too many people become negative, the markets say, okay, we've gone down enough, time to head back north. And then those same people buy back in at higher prices than they sold off. So a really cool visualization here. And going back to Bitcoin, I won't load it again, but I'll just say particularly with Twitter. Bitcoin does I actually will show it just because it's important. It's an important point. Twitter does a really good job of kind of leading the charge in sentiment for where the entire markets are looking, and you can see it pretty well visualized once the waves start to move down. That tends to be where the price starts to head down to. Here's a good example here. As the sentiment starts to drop, as does the price, right? And we actually became negative before Black Thursday happened on Twitter, where that wasn't the case on most other platforms. So they do a pretty good job. And if I were to recommend one source to really look at consistently, it would be Twitter. And they did a good job here too of getting positive right before prices started to surge right past 7,000 and all the way up to past 9,000 before correcting. Now they're still very positive. They're close to, looks like about, yeah, close to 2. And when you get that high, corrections usually are imminent. But we can see here they did a good job of predicting that the price was going to run up all the way to, wherever it went. I think over 13 at one point. It won't show the exact number here because this is just daily prices, but it got very high there. And we're seeing a similar, very similar sort of pattern in the sentiment here. But this time, I think it's leading up to an event. So we'll have a very, it's a more isolated situation where the outcome will be dictated by a lot of other factors besides just sentiment.
Yep.
Okay, something else I want to show. I'm going to skip this, not that important. MVRV, since Valentin, our designated MVRV expert, isn't with us today, I wanted to take over and just quickly go over what's going on long term. As we can see, the price of Bitcoin was close to 10K here before Black Thursday in mid-February, right? And we were actually above water, close to around, yeah, we hovered around 4 to 6%, which means that the percentage of people that were in the green was above 0%. And generally this hovers around 0% overall. So the people in profit going too positive tends to go with correlate with a correction. When it goes too negative, it tends to correlate with the bottoms. So we were actually in the green in mid-February. Since that time, after Black Thursday hit, we went way, way down to about -20 or so, despite the fact that the price has been rising, which is very interesting, because that means that a lot of people around Black Thursday got stopped out and the overall crowd went well into the negative. Now, we are at a price that's close to where it was in mid-February, maybe about, 1,000 off. But more or less, the price has mostly recovered here, but the MVRV long-short diff is now well into the negative again because so much of the crowd went away. This means that the price of Bitcoin eventually can move forward more, maybe toward 10K again, maybe or 10K again or beyond, just to get us back to that 0% point. It might not happen right away, and we might have to wait till after the halvening, or well after the halvening, or even before. You never know. But I would predict it's going to happen afterwards. We're going to stay negative leading up to it, and then as people try to figure out the extra volatile markets going on, what direction prices are going to go, that's when we'll start to see a creep back to 0% for the MVRV long-short diff. And if you look at the very short term here, you can see that we're actually at about, we hit very close to 10% and actually went to about 15%. This was actually about a month and a half ago. So this was peak, bounce from Black Thursday when a lot of people were making money as long as they were long. But right now, we're actually still well above 0% for the short term, despite being under this main long-short diff metric. So it's something to consider. You always want to measure what the short term is doing versus the more longer term metrics like this. And over time, you'll always see that this MVRV long short diff will hover around 0%. So right now, if you're basing it on MVRV long short diff, it's still a very good time to buy and go long, as long as you are willing to hold for several months or even several years. All right, quick recap on prices. So this is a visualization of what the top 100 blockchains have been doing over the past 3 days here. And right now I've basically taken the averages of the 4 different quarters. So we have the top 25 here, the second 25, third 25, and fourth 25 visualized by this purple line here, which shows the averages for those particular groups of coins. For the first 25, it's basically right where the median is. That's why the average isn't showing up. They're both at about 4%. For the second, it's gone up a little bit to about 4.4%. And then notice that on that third percent, so market cap ranks of 51 to 75 are at a whopping 6.5%. This is where the meat of the price gains have been among the top 100 coins over the past 3 days have been. And a lot of that's due to, you know, specific projects like Hyperion, which has just been going absolutely bonkers, Komodo, ABBC coin, a few sort of niche projects that not a lot of people focus on. Usually when we see these latter 50 coins going up at a higher rate than the top 50, these are good sell-off times for the bottom 50 if you do own them, at least for the very short term. Keep in mind, this is only 3 days. But we want to, they basically live and die by how healthy Bitcoin, Ethereum, and those top 25 are doing. So when the bottom half are doing better, it usually is a sign that you want to stick with the top 25 or so, or even top, you know, just top few projects over the short term, because these are likely going to correct in favor of the top coins. Moving on to the 30-day chart, it's kind of a similar story. We're still seeing that the bottom are all kind of surging ahead of what the top are doing. And then going to the 90-day, we just see mostly we're back to even, which, you know, 90-day covers all the way back to early February when we first saw prices rise, but it also covers Black Thursday, which is when everything crashed and burned. And we're pretty much back to square one. 90-day for Bitcoin is at, I'll just look at it on the data. Yeah, we're almost back to square one. We're at negative 5.7%. And all things considered, we were at like a negative 50 right after Black Thursday happened. This is pretty impressive, the bounce we've seen on the 3-month time scale here. So I definitely recommend people check these price charts out on a pretty consistent basis. If you're a Sandbase Pro member, I'm happy to give you access. Just send us a DM on Twitter or here in the YouTube chat. We'll hook you up. And then I also wanted to show the top holders chart here. So this shows the percentage of cumulative change of total supply over the last month. And we have highlighted in bold here Ethereum, followed by a bunch of other smaller coins. And we are seeing an interesting trend right now. For those who tuned in last week, we noted that Ethereum was one of the only projects where the top holders were still accumulating and most of the other small coins were selling off. And, you know, basically the market's kind of played out that way. Ethereum had a great week between around the 17th to the 23rd, 24th or so. And then the top holders kind of sold off. It's kind of topped. Actually, I think it topped, this is actually Bitcoin's price showing here in the black line, but I think it topped around the 26th to 28th or so. And top holders basically sold off pretty big a few days before that. So they kind of set the tone as far as where the price was going for the number 2 market cap coin. And the other projects were all kind of staying flat. But recently, you'll notice around the 28th, we had a few big buys by Engine, Kyber, Basic Attention Token, Gollum, keep in mind, we basically just have 15 projects on this graph, or else it becomes way too noisy. But these represent what a lot of projects did, which was buy big right around, the 28th. And they've continued to do so over the past couple days. And going back to the price chart here, you'll see that a lot of altcoins have been the biggest benefactors. Excuse me, I'll do 3-day chart. Yeah, they've been the biggest benefactors and have kind of exceeded what Bitcoin and Ethereum have done. So if you're looking at just the top holders, in a nutshell here, they kind of predicted that around the 28th, 3 days ago, we would see a bit of a price surge by some of the smaller blockchain projects. And I think it's a really interesting correlation that a lot of people can keep an eye on and benefit from by looking at this on a consistent basis.
Yeah, that's actually quite telling.
So yeah, what's cool is when you see a divergence between Ethereum and the rest of the projects out there, and you can actually tell when the markets are likely going to sort of shift toward the smaller caps versus the big cap.
Mm.
We don't have this for Bitcoin, obviously, but just having Ethereum here, I think, is a really useful thing.
Yeah, that's actually quite interesting, because I was also looking at the Ethereum stop holders specifically. Like if you look at sand data, we saw the top 100 addresses holding Ethereum, especially those within the top 100 addresses that don't belong to exchanges. So basically, the biggest non-exchange holders of Ethereum, they've actually been dumping slightly before the or kind of in the middle of the rally lately. So if you, for example, look at the last 6 months and just look at the non-exchange balances, you'll see this sort of slight dump in its holdings. Yeah, but just go to yeah, balance in USD should be no, because we want the ETH balance.
Got it.
Yeah, so if you can, and then in the bottom left corner, you can also correlate it with the price of Ethereum for that time. And yeah, so you can see that, it's actually a similar pattern as we saw in February as well. So whales actually started kind of offloading some of their bags, not huge parts, but, maybe some 5% of their overall collective bag. So about 750,000 Ethereum has been sent to, outside of their bags. So probably a lot of it moved to exchanges in a sort of acceptance of that February rally. And then we saw the same thing in the last 2 weeks, where whales were kind of starting to offload their bags right as Ethereum started pumping. So this is, not a hugely positive signal for Ethereum short-term wise when we see this sort of sell-off events. So I would be hoping for another sort of accumulation run for the biggest Ethereum whale. So currently we're looking at the top 50 addresses. So Brian, if we can look at top 100, I think it's slightly less pronounced.
Better story.
Yeah. Well,
yeah, look at that.
Yep. So that's basically what we don't want to see, and it is essentially what we're seeing now. So look at look at April 5th. Here, I think it's around April 5th.
Like last 30 days?
No, you can just scroll or hover over the charts. Yeah, that's April. Okay, April 7th then. So between April 3rd and April 7th, there was this massive drop in collective balances of the biggest Ethereum whales, right? And basically, it was right around the time that the Ethereum started peaking, and before it started correcting. So there was an anticipation among whales that there might be some change in the price action of Ethereum. They started moving to exchanges, and sure enough, what do you know? We saw a short-term correction for Ethereum. We're seeing the same type of event now, which is why I would not be surprised to see Ethereum start falling down slightly more than it currently is. But at the same time, the general market trends aren't overly bearish in terms of Ethereum's network activity. So if you see right after April 5th or April 7th, sorry, top, whales started accumulating right back up. In the next 5 or 6 days, they basically made up all of their bags once again, bought back into Ethereum, and ever since it kind of dropped, they bought back in, and since then, Ethereum has been booming once again. So I would not be surprised to see this image sort of start repeating itself once again over the next couple of days. But for now, very unsurprisingly, we are seeing Ethereum whales as well as Bitcoin whales. We can show it in other charts. We see a lot of sort of wealthy holders, some of them starting to offload at these 9K levels, speaking for Bitcoin. But overall, on-chain activity seems to be fairly strong, and even though it's very, very unsurprising to see some midterm or short-term sell-offs here, I, for now, have not seen any sort of super violent movements that will let me know that this is a sort of an imminent major correction is going to happen for either Ethereum or Bitcoin. So on that note, I think we're going to end it here because we're at around a 1 hour point here. So yeah, thank you guys, both of you, for joining me for today's call, and for everyone listening to this either live or after the fact when we share it on YouTube and other social media channels. As I mentioned, if you guys like what you saw today, I strongly suggest checking out sentiment.net. Everything that you saw in terms of metrics, indicators, templates that we have developed, it's all available on sentiment.net. There's a 2-week trial for all of our products, so you can kind of take, kind of dip your toes, see what you like, what you don't like, and I guarantee that you'll stay aboard for at least a few months, if not more. So until next week, we're signing off. If you guys would be interested in talking to us in the meantime, just join our Discord and ping us in one of our trading channels. We're always there pretty much. So if you don't want to wait until next Friday, just talk to us, as soon as today. The link to our Discord is going to be in the description of this video. So that's going to be it for today, guys. Thank you all for joining us. Thank you, Max and Brian, for helping along with the call. And I'll talk to you all in 7 days.
Awesome, Dino. Thanks, everyone.
Thank you. Bye.